This is the Daily Market Comment by Rafi Boyadjian and Maria Bashuktis. Thanks for joining us at xm.com. Traders continue to weigh the odds of the Federal Reserve signaling an end to the run of jumbo-sized rate increases as the central bank begins its two-day monetary policy meeting on Tuesday. Hopes that policymakers will soon pause their aggressive tightening phase lifted Wall Street last week, even as major earnings results encompassing most of the big tech clan flashed recession warning lights. Those hopes receded slightly yesterday, but it seems that many investors are not ready to let up on those expectations, and Treasury yields are slipping today, while market bets on the terminal rate appear to be settling just under 5%. Nevertheless, there is quite a significant degree of uncertainty going into the November FOMC meeting. Although a 75 basis point rate hike is fully priced in, it's difficult to see Chair Powell toning down his hawkish rhetoric when the data remains strong, not just on inflation, but also on the labor market. However, at this point, given the scale of the recent jump in both nominal and real yields, all Powell probably has to do to provide some relief and spur another risk rally is to hint that a slower pace of rate increases may be appropriate in the future. U.S. stock futures were climbing into the European Open, reversing some of Monday's losses when a mini sell-off in big tech stocks dragged the Nasdaq down about 1%. Still, despite a few wobbles, October was a bumper month for U.S. and European equity markets, and November seems to have gotten off on a positive note, potentially signaling an extension of the rebound. And it looks like Asia might join in the fun this time, as shares in the region surged today on unconfirmed reports that Chinese authorities are considering ways of exiting the country's stringent zero-COVID policy. The antipodian currencies are already enjoying a boost from a possible shift in the zero-COVID stance, leading today's advancers against the US dollar. The Australian dollar also benefited from somewhat more hawkish than anticipated comments from RBA Governor Philip Lowe. The pound is also recovering some lost ground, testing the $1.15 level ahead of the Bank of England's expected triple rate rise on Thursday. The dollar's pullback was also a relief for the yen, as the Japanese currency gained about 1%. This is today's Daily Market Comment. Thanks for joining us at xm.com.